Our next guest says two acronyms, MOMO and FOMO, are the best way to describe the current environment. MOMO and FOMO. Joining us now for more on MOMO and FOMO is Steve Sosnick, the chief strategist at Interactive Brokers. I'm laughing a little bit because I kind of know FOMO. MOMO, I want to know how you reconcile the two of those together.
Well, they go perfectly together, Tom. First of all, it's great to see you both. MOMO being momentum, and it's quite clear that momentum is a huge factor right now. For those who do factor investing, whatever, momentum is sort of the factor. But just intuitively, even if you don't break it down that way, it's pretty clear that momentum is what's leading the parade right now. People are believing the trend is your friend, and it certainly has been, and it certainly works over time. But here's the interesting kicker about momentum. If you're strictly investing based on trends, if you're buying because the moving averages are pointing up and because the stock action is pointing up, then you're basically saying, you know what, I can disregard fundamentals for a while. And I think that's kind of what we're getting into here. So that's the MOMO part. And the FOMO part is nobody wants to miss this. This is a big rally, and so everybody wants to join the party.
But how long is the party going to continue?
Yeah, I know. I was just going to ask.
And that is the question, Kelly. I mean, right now, I'm saying sort of Newton's first law of motion applies here. Body in motion will stay in motion until acted upon by an external force. And we have several external forces that can potentially act on this, although the volatility markets, the VIX is telling you nobody really is too concerned. But you have the expiration of the tariff moratoria. That probably is a non-factor right now because those get rolled ahead. I think the bond market could react a little bit, could get a little freaked out by the vote-a-rama and some of the other stuff going down with the budget deficit. But right now the bond market's in its own sort of quarter-end markup period. And then, of course, we have earnings coming down the pipe. And an earnings season can matter because we do, ultimately, despite what I just said about, trend following, when earnings come into play, they matter, and they always do.
I'm getting, as ever, but some conflicting signals on that one, because Brian Reynolds was on just last week, and he was saying, look, I'm following the corporate tax revenue, and it tells me we're going to have a bumpy earnings season, maybe not a great one. And we just talked to Ryan Dietrich. He said, I think actually earnings are one of the reasons why that, the stock market's momentum will continue higher. So I don't know if there's any light you can shed on that, or if we just have to wait and see?
It depends how much is factored in, and that's always the big X factor in earnings season. You're getting a bit of a tailwind from the weaker dollar, which actually is in some ways a bit of a problem longer term because it's telling me that money is sort of flowing out of the U.S. because some foreign markets have actually outpaced ours. But that's going to help. That should help multinational earnings, and we're really driven by the multinationals. But on the other hand, if everybody's gotten such a rosy picture in terms of earnings going forward and basically saying that tariffs won't have an effect or any of these things, then you could really get tripped up by expectations that outkick the coverage. I'm thinking, let's say, of Micron a couple weeks ago, where everything looked great, the guidance looked great, and then the stock didn't do anything.
True.
It actually went down a little bit after a brief rally overnight.